Good weekend, all. Ira Epstein with your weekend edition of your metal market wrap-up. And this wrap-up is for the weekend as we're getting into September 9th, today, Friday, 2022. Wanted to get these out. I know so many people like to watch these over the weekend, so why not do it? Here's what you're watching. I said it in all my other updates. I want to remind you. You got 12 days ahead of you of some pretty craziness. It's not Christmas coming. What it is come Tuesday, we get CPI numbers. The market today, the big rally in the stock market, I've been saying it for 3 days, is off the fact that you're out of the news of Jackson Hole when Fed Chair Powell took the very hawkish stage. You had proof of that yesterday when he had a virtual conference. The market paid no attention to it. You rallied, and that was the big battle day. You rallied, and you went again today. That is that. You went back in stock indices to where you were on the close of business at the end of Friday of Jackson Hole. That was already a 4% decline in the market. And then the market continued further, and now you've made up a portion of that. You haven't gone positive since that meeting, that week. You just got back up to those prices. In the metal markets, today was helped tremendously by the break in the dollar. Now, the dollar halved its break. It was down, as you can see, to 108.35, 60 more points than what it was down. And in the euro, you got up to 101.17, and then you came back to 148. Markets got overextended. It's really that simple. The week was full of Australia raising interest rates. We then saw the European Central Bank, and they're going to go again. They're going to keep going, and we have our meeting on the 21st. And I promise you, unless there's some event in the world that changes everything, the Fed is going to raise rates. Now, in between now and then, the CPI is the big number report because the Fed's going to look at the headline number, which is probably down. I'm guessing. I haven't seen any reports. Wouldn't be surprised if it's 0.5% to a percentage point. Gasoline prices are down 87 days in a row. How is that now weighing on that? That's a big factor. The problem is the Fed doesn't look at that. The Fed looks at the core CPI, which doesn't count energy or food prices because they realize they're super volatile and they're looking at the items that are more sticky, your rent. I think you'd agree. Your day-to-day expenses. I think you'd agree on that. Your insurance costs. I think you'd agree. Those things don't change that much. So they have their basket. They look in there. That's what I'm getting at. Be ready for that. This market is trading aggressively in the financial arena, especially stocks off that CPI expectation. When you and I look at gold on a monthly basis, here's the argument. As bullish as the market and the traders were getting up here at the upper band, that's how bearish they got down here at the lower band. I don't think you're going anywhere. I think you're now churning right in there, and I've said that to you repeatedly, and I think I'm right. When we come to a weekly chart of gold, what is so bullish there? If the Fed goes up another 75 basis points, why does anyone think that's friendly gold? I don't get it. I mean, it's a major headwind. They're out to sap inflation. The Ukraine war is not an impact anymore. What is going to make gold go up? That becomes the problem. And here's the other element for gold. The economy has so many jobs in it that even the recession isn't going to be a deep recession. As long as people stay employed, not unemployed, that's it. Now, in Canada, I don't know if you look today at the jobless rate, it went up 0.4. They have a similar situation. They've been running for them near full employment, and finally it's ticking up. Maybe we're going to see something like that soon on the jobs number. When we take a look at gold on a weekly chart, I don't know. I'm a chartist. I don't see how you get bullish off of that. You still have a pattern of lower highs, but there's a pause. You now have higher and lows. So we're at the beginning stages of forming like a V coming in on the market. Lower highs, higher lows. That falls apart if you take out 1689.80. And that could get you down to the 200-day average. So the number that the wannabe bulls have to not see happen, in my opinion, is not taking out 1689.80. If we rallied from here, I'm going to look for very stiff resistance at 1783.60, all the way up to the gray line there, the 200-day average. However, That's a heck of a rally. I mean, that would put the market up from here in the neighborhood of $65. Come on, that's a big rally. I don't know that you'll get there or not, but that's what you're looking at. And on the support in the market, the 200-week average, I think I said that wrong. Up here, I want to make sure of what I just said. Let me get back to my charts here. There's that chart. Here's this one. I said the resistance. Right. So now that's the resistance there, and here's the support. There's two levels. 1678.40 to 1673.30. Those are big numbers. I wouldn't want to hold short positions under them. So I'm giving you a not want to be short anymore, and I'm giving you ideas as to where the market might go if it decides to get a pop. That's what I'm saying. Momentum-wise, still pointing down in the market. So I didn't see this week offering anything positive other than a close 1/3% higher. The gold-silver ratio, maybe it got overdone at 95, but it hasn't shown that it's turned. And when you look at silver, it bounced as it's properly done time and time again off the lower Bollinger Band. Why is it so hard for people to see that? I'll give you why it's so hard. Because this is where they're the most bearish each and every time. That is where it's going lower. I see my own traders, not the guys I work with. You know, I have a commodity firm, a division that I run at Linn. I used to have my huge firm. We're still pretty important. And I watch what they do, and inevitably, they're getting more bearish at these levels. I don't know how to stop them. Many of them have taken the course. They don't listen. Those that have, I get letters. They're happy, okay? They've learned, okay? This is where you get suckered in by the newscasters, by what the chart action is. The chart action is screaming at you, don't be short there. Wait for a bounce if you want to get short again. That's what it's screaming at you. I have no idea what got into copper this week that it's up 5%. I am lost on it. Why? Because China's gone into more lockdowns. Today they announced the important 2 holidays coming up before the People's Congress. They have told the nation, not cities, the nation, there is no travel going to happen. They have a very popular food that they sell. They don't want that being taken from city to city. It's gone up on inflation pressures. They're putting price controls on it. It sounds crazy, but this is what you can do when you're in China. When you're Chinese, you're not a democracy. Don't think that they're in a democracy. This is a communist country. It hides behind the idea, come in and buy our companies, invest in this until we decide we're going to control it, until we decide we don't like something about it. People that are told they can't travel, that's how it works. They are sticking right up into the People's Congress. I think it's October 16th. That is when they're going to possibly, after President Xi gets his unprecedented 3rd term, then he may be open to other ideas. Could be a few months down the road, but it wouldn't surprise me. In the meantime, he's not backtracking. He's going to show he's strong. The country's going into lockdown because it's the right thing. Now, why is copper up on that? Because if they're doing that, what are they doing in cities that we don't know too much about, where they're telling people, that community, that 2-block area, you're in lockdown, this one's in lockdown. Can that be good for business? I don't think so. Countering that is some areas are doing well. Tesla, Musk sold and produced a record amount of cars that went out the door in China. Let's give credit where credit is due. That man is humming. But remember, those are campuses where Apple is made and assembled, Foxconn, those are campuses. Those people, when there's a lockdown, they stay, they don't go away because the big name brands have to produce. But what about the suppliers to them? That's where the problems come in. In the platinum market, here too, you get down to these bands, I think you want to walk away. And in the dollar, you don't want to be buying against the Bollinger Band. Let the market give you corrections. Now, if it embeds, what's it take to embed? And, I'm not going to teach all that here, but you have to have at least 3 weeks of the markets over the 80 level. It could be this week. This could be the 3rd week. We'll see if that all comes together. And if it does, then I have a different attitude. So that's going to give me the ability to talk to you on the daily videos as to what the CPI report is, how does it impact the markets, what do you do with it? And it gives you the opportunity on my free offer to take a look and see all the research we're going to put out on this, because we're going to talk the metals, we're going to talk the currencies, we talk the energy markets, what's going on via the CPI, and then we'll turn our attention. I promise you, 24 hours, within 24 hours of the CPI, all we're going to be talking about is what's the Fed going to do about those numbers. And how often you want to take a market that has now rallied a nice rally and think that they can hold that in some of these markets in front of the Fed number, that in another, as I said, 12 days, we are going to be looking at a Fed that's going to be how aggressive. That'll be the question that everybody talks about. So to find out all this information, to work with it a bit, it's simple. All you got to do is go to my website under free offers. You can also, at any time that you want, just come here, take your cursor, move it to the top of the screen. You will see up there immediately an icon. Give it a click. It'll take you right into that area. Get on it and at least see this for the next week, 10 days, and decide, hey, is this something I like? You're going to see each day probably 30 to 50 reports. You don't have to get every report. You can tell us if you give us a call. We'll put the ones that you want, be it the metals, the energies. You pick what areas you want. That's what you'll get. Charts of the day come in on it with the all-important numbers that we give you for the price counts. Price counts you won't get anywhere else. They are super important. They're not an entry point. They're exit zones. I'm Ira Epstein. Hope you take advantage of this, and I'll see you Monday.